Investing is the act of using resources today, such as time, effort, money, or an asset, with the hope of a greater payoff in the future. There are different types of investments, including stocks, bonds, real estate, and alternative investments, such as hedge funds and private equity. The investment landscape can be dynamic and ever-evolving, and understanding the basic principles and different asset classes is the first step to understanding investments. While investments do not come with guarantees of appreciation, they can be diversified to reduce risk. Impact investing is another avenue where investors direct capital to ventures that are expected to yield social and environmental benefits as well as profits. So in this video, we are going to discuss about does AI investing work. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Investing is the act of allocating resources, typically money, with the expectation of generating income or profit. However, there is no guarantee that you will make money from your investments. Investing can be done in a variety of ways, such as purchasing stocks, bonds, mutual funds, real estate, or opening a brokerage account. It is not reserved for the wealthy, and you can invest even small amounts of money. When investing, it is important to do your research and understand the risks involved. You should also diversify your portfolio, which means investing in a variety of different assets to reduce your risk. Investing can be a great way to grow your wealth over time, but it is important to be patient and disciplined. Whether investing works or not depends on various factors, such as the investment strategy, market conditions, and the investor's risk tolerance. There is no guarantee that an investment will be profitable, and there is always a risk of losing money. However, if you get the facts about saving and investing and follow through with an intelligent plan, you should be able to gain financial security over the years and enjoy the benefits of managing your money. Investing is a way to earn an income or profit, but it is not a guarantee. It is important to get the facts about saving and investing and follow through with an intelligent plan to gain financial security over the years. Do your research and understand the risks involved. When undertaking any task, it is important to do your research and understand the risks involved. This is especially true for tasks that are potentially dangerous or could have serious consequences. By doing your research, you can learn about the potential risks and how to avoid them. You can also learn about the steps that need to be taken to mitigate the risks. By understanding the risks involved, you can make informed decisions about whether or not to undertake the task and how to do it safely. Identify the potential risks. The potential risks of any new technology can be difficult to predict. However, some potential risks of artificial intelligence include bias. AI systems can be biased, reflecting the biases of their creators. This can lead to discrimination against certain groups of people. Misuse. AI systems can be misused for malicious purposes, such as spreading misinformation or creating deep fakes. Job displacement. AI systems can automate tasks that are currently done by humans, leading to job losses. Safety. AI systems can make mistakes that can have serious consequences, such as causing accidents or harming people. Control. AI systems can become so powerful that they are difficult to control, leading to a loss of human autonomy. It is important to be aware of the potential risks and to take steps to mitigate them. This means understanding the risks, their likelihood of occurring, and the potential consequences. Once you have a good understanding of the risks, you can start to develop strategies to reduce them. This could involve things like changing the way you work, investing in new technology, or training your employees. It is important to remember that no risk can be eliminated completely, but you can take steps to make them less likely to occur and to reduce their impact if they do. Start investing early and contribute regularly. Investing early and contributing regularly is one of the best ways to build wealth over time. When you invest early, you give your money more time to grow. And when you contribute regularly, you take advantage of the power of compounding, which can help your money grow even faster. Time is on your side. The earlier you start investing, the more time your money has to grow. Even if you can only invest a small amount each month, it will add up over time. Compounding works in your favor. When you invest money, your money earns interest, and that interest can then earn interest on itself, which is called compounding. This can help your money grow even faster. It's a disciplined way to save. When you set up a regular investment plan, you're forced to save money on a regular basis. This can be helpful if you're not very good at saving on your own. It can help you reach your financial goals. Whether you're saving for retirement, a down payment on a house, or your child's education, investing can help you reach your financial goals faster. The most important thing is to start investing as soon as possible and to contribute regularly. Even a small amount of money invested over time can make a big difference. Diversify your portfolio to reduce risk. Diversifying your portfolio is a way to reduce risk by spreading your money across different types of investments. This can help to protect your money if one type of investment loses value. For example, if you have money invested in stocks and bonds and the stock market crashes, your bonds may still be worth something. This can help to offset the losses in your stocks. There are many different ways to diversify your portfolio. You can invest in different types of stocks, bonds, mutual funds, and ETFs. You can also invest in different countries and industries. The key is to spread your money around so that you are not too heavily invested in any one type of investment. Diversification is not a guarantee against losses, but it can help to reduce your risk. If you are looking to protect your money, diversification is a good strategy to consider. Don't put all your eggs in one basket. This means don't invest all your money in one type of investment or one company. Rebalance your portfolio regularly. This means selling some of your investments that have done well and buying more of your investments that have done poorly. This helps to keep your portfolio balanced and reduces your risk. Consider professional help. If you are not sure how to diversify your portfolio, talk to a financial advisor. They can help you create a portfolio that meets your needs and goals. Reinvest your earnings to grow your money over time. When you reinvest your earnings, you are essentially taking the money you have earned and using it to make more money. This can be done by investing in stocks, bonds, or other financial instruments. Over time, this can lead to significant growth in your wealth. There are a few reasons why reinvesting your earnings is a good idea. First, it allows you to take advantage of compound interest. Compound interest is when you earn interest on your interest, which can lead to exponential growth over time. Second, reinvesting your earnings helps you to grow your money faster than if you simply saved it. This is because the money you earn from your investments can be used to make even more money. Finally, reinvesting your earnings can help you to reach your financial goals sooner. If you have a specific goal in mind, such as buying a house or retiring early, reinvesting your earnings can help you to reach that goal sooner. Of course, there are also some risks associated with reinvesting your earnings. The value of your investments can go up or down, so there's always the potential to lose money. Additionally, you may have to pay taxes on the earnings from your investments. However, if you are willing to take on these risks, reinvesting your earnings can be a great way to grow your wealth over time. Seek professional advice if you need it. If you are facing a difficult situation, it is always best to seek professional advice. This could be from a doctor, therapist, lawyer, or other qualified professional. They can help you to understand your situation and develop a plan to address it. Professional advice can be invaluable in helping you to overcome challenges and achieve your goals. Investing can be a great way to build wealth over time, but it is important to do your research and understand the risks involved before you get started. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.